Thanks everyone for joining. I know it's the end of day 2 and everyone's probably had an amazing time at this event, and so we hope to really provide you with a lot more value. Cross-border payments is obviously a very big topic, and we've got a very diverse panel here who had some really interesting insights as we were outside talking, so I'm hoping we can really make this fun and really share some cool insights with everyone here. Just by ways of introduction, my name is Mo Ali Yusuf. I'm the CEO and co-founder of a digital assets infrastructure company called Fuse. I'm also a board member of MENA FinTech Association, and MENA FinTech Association is the largest industry body covering fintech and digital assets across Middle East and North Africa. What I'd like to do is I'd like to just go first across this row and ask each panelist to just tell us about the company you're working for and what are some of the trends that you've seen in the last couple of years in cross-border payments.
Fantastic. So, can you all hear me? Okay. I'm Shahbaz Khan. So this is sort of we're rebranding my title as we speak. So I'm no longer New Payment Flows, but I head the commercial payments and money movement business for Visa for Central Europe, Middle East, and Africa. And I think for us, cross-border for us is the secret sauce of our business, right? I mean, we sort of pioneered cross-border payments in the card space, and now we're looking to build the cross-border infrastructure for money movement. And as we sort of see the trends evolve, cross-border obviously very important for our region. I think there are two major trends that are evolving within the cross-border space, right? So the first one, as it is in the payment space, right, digitalization of cross-border payment services. I mean, if you sort of pre-COVID, cross-border payments used to be a very, very sort of a face-to-face kind of experience for a lot of people who were looking to move money, mostly outbound from our region. And that's sort of shifting a little bit to digital, out of compulsion, out of experience. And I think the second big trend that I see is around what I'm calling consumerization of cross-border payments, right? So what I mean by that is, as you expect, the things that you expect as a consumer for your payments when you're buying goods and services are the same things you expect as a consumer from your cross-border payments, right? So you want them to be quick, you want them to be real time, you want them to be transparent, so you know when the money is going to get there, how much money is going to get there, the fees are clear, the FX is clear, and you want them to be reliable and secure, as you would expect from your payments as you're paying for goods and services. So I think those are the two broad themes that I see, and I would love to discuss a little bit more about that.
Thanks, Shahbaz.
Perfect.
Aditya.
As you can see, my name is Aditya. I'm the CPO of Lean Technologies. Because we're not Visa, I might need to explain what we do. So Lean is basically an open banking platform that connects fintechs to the bank accounts of their customers, everything being permissions. I think in terms of trends that are really interesting to me, it's anything that's replacing SWIFT to some extent. I think there are two very interesting ones I'm seeing. I think bigger companies that have treasury systems across multiple jurisdictions. We're seeing that instead of they're basically managing that treasury in a way where they don't actually need to move the money across borders, and they're just balancing their books, so to speak. And then the other side is on the crypto side, right? So for the people who aren't big enough to have multiple bank accounts in multiple countries, I think using basically moving money into crypto, transferring it across borders, that's in quotes because you're not really transferring it across borders, but to another country with another, either another crypto wallet or the same crypto wallet, and then using your outflow to take it back out into fiat. We're seeing that as you were talking, it's fast. The secure, there's a question mark around the secure, but in terms of the user experience, we're seeing more and more applications where it's built for not only the everyday consumer, but also businesses, and it's super cheap as well. So I think those are the two that I'm most excited about.
Thank you very much. My name is Ralf Klabischnik. I am living between Switzerland and the UAE, so I'm daily in the problem how to transfer money from Europe to the Middle East, and it's not easier with the FATF grey list. So one topic for sure is FATF, which is a big issue, especially for the region here. And the other topic is what is the currency we are going back and forth? Is it US dollar? Will there be something else replacing it? And we have seen some banks failing in the last few months, and these banks have been quite important in international payments, especially in the startup space. And I believe the blockchain technology, stablecoins, CBDCs are a real second option to go on.
My name is Naimish. Can you hear me? Yeah. I'm from Dubai Financial Market, leading the digital products and channels. To put it in context, why am I here as a part of this panel and why cross-border payment is so important to us is because of the IPO momentum which we had in 2022, our investments in digital transformation led to onboarding 167,000 customers, investors just last year. And to put this in context, it was 7,500 only the year previous in 2021. Now, 33% of our IPO subscription came through our digital channels, the DFM digital channels, which means that we need to, the customers need to pay us to be able to subscribe to the IPOs effectively, and we also being the dividend distribution agents. These investors, which 200 nationalities is a mix we have to distribute dividends, which could be local transfers, would be international transfers. Hence, this topic is extremely important to us, and how can we make the life easy for our investors to pay us during subscriptions, and how can we effectively distribute the dividends to them with security, transparency, and without any back and forth, which happens today. Thank you.
Thank you. So I'd just like to set some context here, right? So when you think about a cross-border payment, this is a very broad topic and a very big topic. So you can think about a worker who's sending money back home. You can think about businesses who are paying suppliers. Even when you go and shop online and buy something from another country, that's considered a cross-border payment. So if you go and read the latest report that the MENA FinTech Association published, we saw that the total B2B transaction volume for cross-border payments equaled $30 trillion. It's a huge market and a huge opportunity to go and solve. And not only is the market big and the use cases big, but the payment rails are also big. You've got payment rails on blockchain, you've got the card networks, you've got the SWIFT networks, the banking rails. There's a lot of different ways to make payments, and that's really what makes this topic so broad and so interesting to talk about it. It's probably why this room is also full. So I'd just like to ask each of you a more specific question. So maybe Shahbaz, just starting with you, how does leading infrastructure companies like Visa really keep up with the changing landscape when it comes to new technologies, regulations? What's some of the things that you guys are doing to really keep your dominant position?
Sure. So look, I think, I talked about the trends a little earlier. What we are doing is we're trying to enable our partners innovate around those trends, innovate around what the consumers want by building, buying, or partnering, right? So we've got quite an open approach to this. We know we're not going to be able to build it all, so we're quite open to buy and partner. And we are doing exactly that. So in terms of providing our customers choice of rails, so we built out the Visa network, which is obviously a proven network for us. For the longest period of time, the Visa network only pushed money one way, right? So you buy goods and services and you're paying with your card and the money just goes one way. We have built now capability to push money both ways. So your credential becomes a means for you to receive funds, whether it's a disbursement from somebody like a DFM or whether it's your family sending you money from overseas. So we've built that capability out on credentials. We understand that there are lots of parts of the world that are not accessible through our credentials. So we bought a company called Earthport, which is now part of the Visa ecosystem, where we are giving you an ability to send money to any bank account anywhere in the world. And then we are obviously also understand the importance of digital wallets globally, and we are increasingly looking to bring on board wallet integrators onto our network. So I'm sure you would have heard about our partnership with Tunes that we've sort of brought onto our network. There is another exciting announcement that will be coming out, I think later this week, where we are integrating with another provider. So with all of this, we are connected to about 16 card schemes, 65 ACH networks, give or take.
Wow.
And over 7 billion endpoints, right? So we're building out this network. We're calling it the network of networks. And this is all on the sort of B2C and the B2B side. We're also building another sort of an independent network called B2B Connect, which is sort of a response to the correspondent banking systems. I mean, it's clunky, it's expensive. We talked about all of the pain points.
Yeah.
So we're building that. We're acquiring companies to make sure that there is transparency around FX. There is, with the currency cloud acquisition we make, so that's part of the infrastructure as well. And we're doing all of this under the reliability and the security that Visa is known for. So, like I said, we're trying to build this, what we're calling the network of networks, to help our partners and enablers to work with us to build the experiences they want to build with their consumers.
Got it. Aditya, moving on to you, and I think staying on the theme of a network, I'm not sure if I can call Lean a network or not, but being the leading open banking platform here in the region, can you give us a flavor of what you guys are seeing and what you're doing in the cross-border payment space?
Yeah, so the thing with open banking and most open banking regulations is they're quite localized, right? You have a different license for the UAE, a different license for KSA. But regardless of that, we enable a lot of cross-border payments in some way or the other. And if you think of cross-border payments, there's the step where you need to move money to the person who is going to actually cross the border. There's the actual crossing of the border with the money, quote unquote again. And then there's when it's crossed the border, it comes back to someone that needs to go to the eventual destination, right? So the first and third step, those are both domestic, right?
Yeah.
And that's kind of where we come in, right? And that's where open banking, I think, has already proven to be useful and can be more and more useful as the regulations develop and the banks get more and more on board with it. So I think where open banking's been very useful, I think two places or two different ideas. The first one is KYC, what we were talking about, right? Open banking allows you to have an accurate KYC, and it's a lot smoother than the traditional forms that we've all seen. I think two panels ago someone said it changes it from like 5 days to 15 minutes. That's pretty much true.
Yeah.
Right. It's like 5 days to 3 minutes. So the KYC I think it's extremely important because as we innovate on how we move money across borders, there are going to be gray areas that we need to make sure that we aren't crossing any like AML or AML lines, right? And it's very important. So KYC is going to be more and more important, and I think open banking on the data side allows you to perform KYC very quickly with minimal friction to the user. And the second one is the actual payment, right? And that's the payment in and the payment out. More so than open banking, I think in the UAE and Saudi, what's really helped cross-border payments is the implementation of an instant payment network. So it's IPI in the UAE, Syria in KSA. And with open banking on top of that, what we allow is, as you were saying, a very simple and secure way for the customers to move the money. But again, because it's through this instant payments network, it's instant as well. And if you think about cross-border payments, FX is changing often. People want to take advantage of when the rate is down. And if it takes T+2 days for the money to reach in the first place, then you're left in a situation where when you intend to make that transfer, the FX might change. And we see that a lot with our clients, right? When the FX changes between, let's say, the UAE and India,
Yep.
we have a spike or a drop in transaction volume. So I think those are the two areas that open banking is really working with, whoever is actually doing the cross-border payments part itself
Yeah.
to enable the cross-border payments.
So I think the two things I took away is that customers are very sensitive to both cost and speed on a cross-border payment, right? So Ralph, moving on to you, in Crypto Oasis, you've seen a lot of cool businesses, startups in blockchain and DLT. I don't even want to say the word crypto, but in blockchain DLT, it'd be great to hear about some of the more interesting companies or startups that you may have seen that are working on solving for the challenges in traditional cross-border payments.
Probably I can start with one of our own companies. We founded a payment service provider in 2016. to pay with Bitcoin cross-border. But we did it with the Swiss government, and the Swiss government said, look, we would like to accept Bitcoin, but we want to have the direct settlement in fiat money. So it was about the exchange rate, and it was about KYC and AML. Even in the blockchain space and in the digital asset space, it's important to know from whom we are taking the money and where's the money coming from. But I would like to take it a step back. I mean, I love this region here because it's open for the world. The vision of the region is to grow double the size in terms of people living here all 10 years roughly. And the first time when I came 1998, the UAE looked totally different than today. But this vision can be only followed if also cross-border payments and the money flows are open like the region. And at the moment, someone is controlling cross-border payments, which is probably not aligned with the vision of this region or other regions. And I personally believe we should fight for independency in cross-border payments and for neutral standards in that. Yeah, it's not about money laundering. It's not about being part of something. But, you know, a simple example, in Switzerland, when you have a US passport, it's nearly impossible to get a bank account. And this is a problem. I mean, and where is it coming from? Because of the controls of cross-border payments at the end of the day. And I believe we need a shift, and if blockchain technology and digital assets is part of it, or open banking, or Visa helps on that, I personally don't care. We got an issue, and we need a solution.
Yep. I'm going to come back to the question on compliance and KYC next. Namesh, I'm happy you're here because I've got a rail, and a rail, and I've got a customer at the end, or a user of cross-border payments. So DFM obviously has a lot of customers globally and has a lot of payment flows on a cross-border basis. Can you give us an idea of how DFM is actually leveraging cross-border payments? What are some of the opportunities and challenges that you see?
Yeah, sure. So yeah, from a customer perspective, we're really agnostic to all the innovations that are happening, and we hope it happens faster. Like I said, right, with the volumes which we are seeing in terms of receiving money, collecting money, and transferring money across the 200 nationality customers we have, we see day-to-day challenges. When you have to distribute a dividends, we're never sure. So what the customer wants, like us, is, you know, the money is safe. We know where the money is. We're able to track it. The cost of the transfer is reasonably efficient, and we have a good FX rate. Now, if all of these innovations don't take care of any of these, then it remains a technology innovation. However, if any of the new payment rails, so we look forward to identifying and finding partners who can provide all of these to us, which benefits us and our investors in the main. So there are companies now. So if you see UAE in the first 4 months, I got some stats. There were about 5 million transactions that have occurred. Inward remittance, inward money coming into UAE and money going out of UAE. This is based on our traditional, most well-known payment rail which we have, which was about billions of dirhams. That's an opportunity, right? Now, they have done some incremental improvements to give us transparency, or at least be able to track something about it. But I think there's a lot of opportunity for innovation there, which helps customers like us. We want to make sure that we are able to collect money on time and give a timely service to our investors, and be able to distribute the dividend on time at the right rate effectively without any operational overhead in the back end. Otherwise, you'll have a back office who is only doing recon 24/7 for those 5-6 days when the IPOs are on. We want to reduce that, which improves our efficiencies as well.
Yeah. So I think almost everyone in the room has probably sent a cross-border payment, and I think we are okay to accept a certain amount of time it takes. Sometimes, you know, if it's on a regular Swift rail, it's 2 days or 3 days, and it can be cost a bit of money as well. But what we really hate is friction. So we don't want to go through the compliance and the KYC steps. So I wanted to hear from the guys who are on the panel if you have any thoughts on how on some of the trends around maybe making payments a lot less frictionless. What are some of the things that we're seeing around reducing the KYC requirements? Obviously, it's a step that has to be done, especially because of FATF rules and everything else. But is there any trends that you guys may have seen or things that you guys are doing at your respective companies to kind of make it a bit more seamless?
Probably one trend what I see, or one hope that I have, is that we don't have to KYC in every institution again and again and again. The UAE is on the forefront of having an electronic identity and working with the electronic identity. When you add KYC data to that and you actualize it once or twice or 4 times a year, then a lot of our processes would be much more efficient. But I know it, at least from Switzerland and from the laws there, every bank is responsible to do the same again and again. And this is a very cost-inefficient way to do it. And then the funny stuff like, please send us a utility bill. That's probably the most inefficient process ever. And the utility bill, when I'm renting an apartment, including all bills, it's not easy to get one. So I think there's a lot of old process, old thinking, and new technology which enables a much more efficient process.
Yeah, I think I've got copies of DIWA bills floating around all over the place.
And when your address never matches the one that's on your bill, right? Like it's a pet peeve of mine. But I think that's the challenge, right? I think a lot of the partners that we work with, they are so because there are so many choices, right? And these are all parallel lines, parallel rails that run next to each other. And if you're a bank or a large institution, and you want to give your customers optionality, it's like a one-to-one connect with each of these rails, and you're so focused on that back-end piece of work that you need to do, the correspondent banking accounts you need to set up and all of that sort of stuff, that you forget that there is a consumer at the end of this, there is a business at the end of this that's looking to make the payment, and rather than focusing on that experience, it's all of the sort of the technical heavy lift at the back. So I feel like there is also a need for there's a lot of fintechs out there, so if somebody is looking for an idea, there's like a need for this orchestration of all of this, right? I think institutions, whether you're a money transfer operator or whether you're a financial institution or a fintech for that matter, should only be focused on creating that really smooth, slick user experience which incorporates KYC, doesn't make you jump through the hoops, and own that experience, and then leave it to the, we've got there's a Visa company called Yellow Pepper that can do this. There are other options as well where, based on what the customer wants to do, the payments are routed in the best possible way. And you have the option to do what you want to do from the back-end perspective and not really focus on sort of these heavy technical integrations that we all seem to be focused on.
Yeah. So at Lean, when it comes to kind of connecting the payment experience, you mentioned that you guys are at the beginning of the hop or the end of the hop, and not necessarily the hop, right?
Yeah.
So what are some of the things that you guys might be doing to kind of connect into remittance companies or some other cross-border payments companies, but make it as seamless as possible for the actual customer?
Yeah, so as I said, I think the KYC is a good point because I'll bring that up again. I actually disagree, and I actually think that KYC is important enough that at the least banks need to keep doing it. There's obviously a massive advantage to me there because through open banking, we can get that information from which the banks did the KYC, and banks are good at doing KYC, and we can give that to other fintechs, right? So I do agree that it needs to be more seamless, but I think taking the foot off the pedal on KYC, it's fine for the fintechs until something goes bad. And back to your question, which is, what can we do to make it seamless? It is, use the services from the bank, work with them to expose that, KYC data so that for the future, it's, one click for everyone else. And not only is that one click, like you get the KYC info, you can get any other information that's needed to eventually make a payment, whether that's even like getting the beneficiaries from your bank accounts so that, you don't even have to put in an IBAN. Putting in an IBAN is quite annoying, right? For the person who you want to send it or the business you want to send it to. And then, I've been not saying the word, but off-ramp, on-ramp. Like that's what it's called in crypto, and it's technically the same in cross-borders, right?
Yep.
The off-ramp is, again, secure. It's cheaper than card, which is 1.5 to 3.5%, which is huge for a lot of first startups, because startups need to make that they need to make margin somehow, and if 3.5% of all the money that's coming in is going to a card network, it's quite prohibitive to them. And then the larger companies, they realize just on absolute value how much of the money that is supposed to be coming into them goes away. And for cross-border, a lot of the time, the person whoever's doing it in the middle, they're fighting on price, right? They're trying to give an FX that is as close to whatever the true FX is. And if you're, charging 1% or even especially 3.5%, you're taking away from that. So again, for open banking, it goes down to price and user experience, which is a mixture of, speed as well as lack of friction.
I probably want to jump into that because the percentage fees on payments are in general a problem because it doesn't matter how big the amount is you transfer. If you have $10 there or $10 billion, the effort, technological-wise, is the same. Of course, this is the business model of Visa and others, but look at transactions in Bitcoin or USDT or whatever, you see transactions, in the moment quite expensive, costing $30 probably, but you can move $1 billion for $30. Of course, do the KYC, do the AML, but you are able to move it, and there's no one stopping you from that.
Sorry, can I just bust a couple of myths here?
Of course.
Just the first one is the 2.5% or 3% or whatever you guys are referring to. So obviously that's not Visa. That's actually the acquirer that you might be using to make that transaction. Obviously, of course, there is fees on the network, but it is not prohibitive. And again, this is so just to reiterate my point is, if we have, like I said, if the customer is given the option, right, they will make the choice. They will make the choice on experience. They will make the choice on price. They will make the choice on value, right? And I think that's most important. I mean, we talked about sometimes the payments taking 2 days. I have had a personal experience where, I think for the UAE, we're very good to sending money to India, but any other third country, so I want to send money to Australia, which is sort of my second home. 2 days, the money, whatever the money gets there on the other side, if I had the option to pay a little bit extra and get the money there in 20 minutes, if I want to pay for that value, I'll do it, right? And I think that's what I mean by giving the customer the choice to make that call and the flexibility to make that call.
It's unfortunate.
I think it's great when we have the choice, but we should think how many people are detached from the choice, are not able to choose Visa probably, or MasterCard or Amex or whatever, of course. And I agree with you, on one side we have the merchant fees, which are rather in that size. But when we are not talking about the merchant fees, when we are talking about the international fees, and even 30 basis points or 10 basis points is a lot when you transfer at the end.
Yeah.
And most of the times it's the hidden fees and the Forex fees, for example, where the old banking system is really making the money at the end.
Yep. I mean, I think cost of receiving money in the developing economies is one of those real hot items on the World Bank's list, right? I mean, on average, in some of these economies, you spend 7, 8, 9% to get money, to receive money.
But combining what you are doing and what we are doing, I hear a lot of people saying, hey, shops need to accept Bitcoin or cryptocurrencies, and I don't believe in it. I need a Visa card where I can send my crypto, and Visa is already accepted everywhere. So you got the infrastructure, you did it already. That's a much easier way. It's not cross-border payment. Well, it is, because when I send $100,000 from Switzerland to the UAE to live here and to work here, and then I have a local credit card, this is the perfect setup. This would be my choice at the moment and the cheapest way to do it.
I think definitely the options for customers are limited. So the remittance volume coming into MENA market was $62 billion. And oftentimes remittance companies charge 6 or 7%, right? So there's a lot of spread for them to go and capture, and there's not a lot of options yet. But I think, Ralph, to your point now with DLT and blockchain, there will hopefully be more choice for people to make. Nimesh, going back to you for a second, right? Obviously, some of the challenges that you have is, you want to open up DFM to as many markets, as many people as possible, and yet you really want to control risk and cost at the same time. Can you maybe help us with some insights from your side, operating a global business? What's some of the strategies that you guys are doing to really balance out cost and risk?
So, no, probably some of the comments which you already made, right? So we realize that the improvement can take time, the innovations can take time, and we want to give our customers a better experience. So we have launched a new product for them, which is coming out very soon, where they will be able to manage their dividends more effectively, right? And I would also agree that some things like choice, where we can offer them a traditional rail for transferring money through the traditional rail or through some other companies which provide them a faster time of response at a higher cost. So give customers a choice of any of these which gives them the opportunity to choose on that. And even the top-up. So that's where Open Finance comes in place. Today, we also give them option of topping up their wallets. Now, through credit card, everybody knows it's an expensive affair. All the processors here even charge for the debit card top-ups, etc. Thanks to Shabazz and team.
Shabazz, everyone's
So
talking
that's
about
why I
the
like
cost of Visa.
I like this man sitting here, who probably, if Open Finance comes in, will be able to top up our wallets at much lower cost. Right, Aditya? You promised that?
That's the hope.
Thank you.
And I think asking on behalf of Ralph, do you have any plans to accept crypto top-ups also?
Crypto what? Sorry?
Crypto top-ups onto DFM.
Yeah, I mean, we can help you. We would do the fiat settlement, so it's dirham at the end of the day.
Like I said, we are agnostic as long as the customer sees the money, right? However it comes, within the regulation and regulatory framework.
Great. So we're almost out of time. I'm going to ask you each one final question. Shabazz, starting with you. There's a lot of businesses here that we've seen at this event at DFS. What are some of the advice that you would offer a business who's looking to enable cross-border payments, either in terms of payment rails or cost or security, many of the things that we've talked about?
Yeah, so I think again, just leaning back on all the conversations we've had so far, right? I think all businesses should sort of explore options and work with partners that give them that optionality, right? So I think DFM would be a customer. I would love to talk to you, Nimesh. But there are options available to enable any use case or any cross-border experience or payment that you might want to do. What we're trying to do here is we're trying to displace cash and checks, right? So we're very happy to build the experiences that the business is required to make things happen. I mean, wallet top-ups, in the UAE especially, you don't have to go through the acquiring rails. There are options available. So I think you should just sort of work with partners that give you the breadth of optionality to do the experiences or create the experiences that you want to do, and you should just sort of focus on what's value for you, cost, experience, transparency, security, reliability. And just keep your options very, very open. The only other message I want to give out to all of the enablers out there is, come and talk to us. We need everybody to sort of work to challenge some of the old infrastructure and the old methods of doing cross-border payments, and we would love to work with you.
Aditya, same question.
Same question. I'll go different routes because we are a startup and we work a lot with startups, and there's a lot of startups here. I would suggest that every time you make an international payment, you look at how much you paid, and you look at whoever the beneficiary was, how much they received, and then compare that to the Google rate, and you'll realize how much you guys are losing on FX fees, not just the fixed fee, but the percentage as well that's hidden. That's my suggestion.
Ralph, and for you, a slightly different question. There's a lot of aspiring, I think, entrepreneurs in the room who are building stuff in blockchain. I actually know a couple of them. And it'd just be good to hear from you, based on the companies that you've seen, what advice do you have for them if they're looking to build a cross-border blockchain company?
First of all, only when you're in the blockchain space, you are not exempted from laws and regulation. A lot of people think that, it's just not true. And second of all, I mean, you know, the stable coins we're talking about today, the relevant ones are US dollar based, USDT, USDC. And I believe we need an alternative also on that side, in the normal banking world and in the cryptocurrency digital asset world, to be more neutral. Probably we are coming back to a gold-backed stablecoin or an oil-backed stablecoin or whatever, but something more neutral than that. This would be, in my opinion, very interesting.
That's a very heavy topic. We'll end it there.
You know, I'm not good in this market.
Aditya, similar question, Sanna Aditya. Nimesh, similar question to you, right? So as someone who's taking a business from a local marketplace to a global marketplace, what's your advice for aspiring businesses who want to grow their business across Middle East and even beyond that, if they want to open up to cross-border payments?
I think I'm a consumer, so my advice would be to look for partners who are able to give you the right payment rails and keep a watch for what's coming in. So because I was just keeping the consumer hat off, seeing the trends, what is happening. We have seen the announcement of central bank moving into central bank digital currency. We have seen companies talking about payments using stable coins. Central bank is launching its NPSS system, which will improve at least the local transfers. So we are keeping a watch on all of these and heard a lot about Web 3.0. Why can't this become the primary use case for Web 3.0? After all, it is called Internet of Transactions, right?
Yep.
Now, whether it's, and of course it has all the elements of all the technology which you mentioned, blockchain, smart contracts, probably NFT could be that contract which you're transferring value to the other side. And I think that's the most important case. They should stop working on any other use case, but use this as a primary use case on the Web 3.0.
Yeah.
Make its name valid.
It's actually a very forward-thinking view, so thank you for that. Look, I hope everyone here had a good time. I hope you all came away with something. The panelists are going to be here off stage if you have any questions. Thank you to you guys on stage.